Greetings and welcome. My name is Jason Adkins, speaker, author, and local real estate expert. I'm excited to introduce you to my new series where I will be bringing in some of my friends, professionals, and other local experts. We're going to be talking to you about real estate, business, and events going on in your communities. Welcome to my circle. All right. Hey, welcome back to another episode. Today I have with me Lucas Adams from Motto Mortgage.
Hey, how are you guys doing?
So I'm excited. Lucas, you want to tell them quickly a little bit about yourself?
Yeah, so my name is Lucas, owner-broker here of Motto Mortgage Aurora. We're based in Wasilla. Small team, small family-run business. We've been open for a smidge over 4 years, I believe.
4 years.
2026, yeah. It's been 4 years. Been growing fast, developing our team and just, trying to do the best we can be.
It's been amazing to watch because we started around the same time. I remember I was at Remax's pre-licensing training, right? And so you had sponsored some of our meals, and that was pretty cool. That was like your first year in business.
Yeah, that was very early on. The sponsorship budget was pretty small given at the start. So I think it was McDonald's breakfast burritos.
Hey, it tastes good. It filled us up.
Food is food. And, just kind of back then never originated a mortgage. Thought, hey, what's the worst that can happen? Open my own. Everyone big and famous goes bankrupt at least once. But we're thriving and we're still here.
Still here. 5 years is the hump, though, right? So what got you into finance? I know you have a major in finance. Is that what led you to brokerage?
Kind of. I was buying a fourplex myself. Started an internship in a property management company. Saw how cool owning multifamily for long-term investing is, and I was like, well, this would be cool to do myself.
Yeah.
Learned the mortgage brokering process while buying. Due to, in all honesty, I was not a top-tier client back then at 19 years old, still in school. So learned how to, show that I could be a great client through guidelines and stuff, and kind of got them down. And I was like, well, why not combine my interest in real estate and my love for numbers into one? Because, I would be a horrible realtor, even though I am licensed. I'm colorblind, so I can't help show a house worth anything. So
the green one.
Yeah. I try my best.
Yeah. That's all you can do. And that's what I noticed about you. Most of we did a couple of transactions together. More than a couple, to be honest with you. But I noticed a transaction is more personal. It's not transactional. With as many transactions that you do, I can call you at any time and you know about the individual, how they're doing, about their family, those kind of things. And so I always love that about you because I care deeply about my clients. I try to build those relationships, and I notice that you do too.
I'm always trying to find a new fishing partner.
Yeah.
So especially people moving up to Alaska for their first time, I was like, hey, meet me at the office, jump in my truck. I don't have a big truck, so I try to take 2 people at once instead of 3 or 4 and go fishing. Because, any excuse for me to get out of the office when it's a nice sunny day.
I remember that. We closed one deal, and I called him to see how things were going. He goes, oh, yeah, I'm going fishing with Lucas. And I called you. I was like, how come you didn't invite me? Because I like fishing, too.
You didn't miss much.
Yeah.
I had to promise them. I swear there's typically fish there.
Yeah.
I think he caught 1 and I caught 0. So I was like, hey, at least he's the one that caught the fish.
And they're getting outside. And that's important for Alaska, to get out of the house.
Hey, we got 3 months.
Yes.
Where it's nice and warm and beautiful.
Right.
Depending on the summer. Sometimes about 2 weeks.
I love it. When we deal with clients, a lot of time when it comes to financing, a lot of people are afraid because, they're saving every penny they have to make this down payment. And there's a lot of misconceptions out there. And so one of the biggest fears I get from clients is that credit pool. So can you tell us a little bit about the difference between a soft hit and a hard hit?
Yeah, so we start off all of our pre-approvals with a soft credit pull. I don't like my hard inquiries, getting hit, dropping your credit score. So we start off with a soft credit inquiry because that is not reported to the credit bureau, so it does not harm you.
Okay.
So, and then if, hey, we need to create a 3-month game plan, 6-month game plan, we're not hitting them with hard inquiries over and over and over, dropping that score, tanking it. So we try to, hey, we'll do the hard inquiry when we have you under contract, but if you're, just right there, okay, hey, here's a 30-day game plan. Let's get, your utilization down. Hey, let's get this $30 collection paid off and knocked out, just because you don't like your hard inquiries getting knocking your credit score down 20, 30 points temporarily. So we take on the cost of all the soft pulls.
Okay. And if they were to do a soft credit pull, are they able to still shop around with different mortgage lenders, or does that impact?
Correct. So depending on the other mortgage brokers, they might not even see that we've done a soft pull.
Okay.
So I always say, hey, if we're going to do a soft pull and you're going to be shopping around, make sure that they're also doing a soft pull.
Okay.
Because if we do a soft, they do a hard, it just negated the whole scene. Because now that hard inquiry is on their credit report.
Okay. And a lot of people don't know, Lucas also has a military background, so he's familiar with what I'm going to ask him. So in the military, we often get what is called dorm lawyers, right? So people that are not licensed, certified, but they know everything, right? It's kind of like having your grandpa or stepdad coming in and doing a home inspection with you. So what are some things that you wish buyers or people in general would stop repeating about finances, which is just not true?
We've heard in the past that you need a 720 FICO score to use your VA loan.
Mm-hmm.
Technically, the VA does not have a minimum FICO.
Right.
Individual investors and lenders have overlays.
Mm-hmm.
So we've done them as down as a 501 FICO score.
501, wow.
I'm willing to admit, hey, they're not getting the greatest, world's best terms, but it's, hey, let's get you closed now. Let's show you how to build your credit for the next 12 months, and then let's refinance you into some better terms down the road.
Yeah.
So that's been one we've been told. One that really shocked me was we had a guy come to us, very new into the Air Force, E3, just moved to Alaska. His buddy told him he wasn't able to use his VA loan if he was more than 30 miles from base. Because apparently the VA was saying, well, how are you going to live there?
Right.
This is Alaska. Anywhere out in the valley is going to be more than 30 miles. That is a huge misconception.
Right, yeah.
So.
Yeah, and you get folks that are nervous. They say, I already have a VA loan for my property out here. We haven't sold it yet. Can I get another one? And they think there's this big cap. Can you elaborate a little bit on that?
Yeah, so especially in Alaska, we do have a high limit. 2026, I'll be honest, I don't know the exact number off the top of my head. It's about 1.2 million-ish is what they call it. But the calculation for entitlement is kind of more complicated than that. In all honesty, I use a calculator.
Right.
Throw in, it was yesterday, brand new realtor in Anchorage reached out to me. She's going to be doing real estate. Husband's active duty Air Force. She's like, hey, we already have 2 homes.
Right.
There's one in Tennessee and one in Indiana, I believe. And they're like, can we even get anything like a condo off base? I did the calculation with Alaska's entitlement. They have 788,000 of entitlement left.
Perfect for plenty of homes here in Alaska.
Correct. And they're even talking about doing multifamily. And I was like, well, she's like, so if it's so say 788 and then the house they're looking at, it's on the dot 888.
Right.
Another misconception is they need to bring that $100,000 gap. Actually, you need to bring 25% of the gap.
Right.
So if there's a $100,000 on the money gap, you only have to bring $25,000 down. Okay. You are matching the VA's 25% guarantee.
See, it's good to know. That's why I like talking with my lender friends, because there's just so much information out there. There's different types of loans, right? Most people are stuck with this conventional or FHA, or the VA is the most popular. But can you tell us some other loan options that you guys have available?
So what we're seeing a lot is FHA is like the bread and butter first-time home buyer loan if they're not in the military. Right. But there are other loan programs, Home Possible, Home Ready. Some of them have income caps. Some of them have different credit score caps. So it depends on the buyer's preference. But some of the nice things about those is you can see a reduced interest rate compared to a regular conventional loan, as well as it's typically 3% down. Okay. So there's pros and cons to both. So obviously, hey, FHA is going to have a higher debt to income limit, and potentially a lower interest rate, but then higher PMI. Right. So it's a case-by-case basis. So we typically will look at all different programs and then put them side by side to make sure the buyer's making the best decision. We're not going to force them into any specific one. We can provide, hey, this is what I would do simply based on the numbers, because the numbers don't lie. Yeah. However, we do want to give all available options.
Numbers are numbers, right? They're there, black and white.
And then you can go into more non-conventional items. You got DSCR loans for some of our investor friends, conventional investment, as well as came out, I believe, 2 or 3 years ago. The idea was, hey, if I want to buy a fourplex, even if I'm owner occupying and I don't have FHA and I don't have VA, 20% down, right?
Right.
That's been the rules for years and years, way before I even got into the industry.
Right.
Well, now there is the option for an owner-occupied 5% down conventional fourplex.
Wow. Okay.
And that has its pros and cons compared to the FHA fourplex. There's no self-sufficiency clause. However, there could be a higher interest rate than FHA. So it's another case-by-case basis of the property itself, which route's going to be best.
Right.
So we have to tailor each individual, whether it's the specific property, the specific client, the specific area, to the specific loan.
Okay. And you guys also have creative financing options.
Correct.
So you want to talk a little bit about creative financing?
Yeah, so something that we've been doing a lot lately is DSCRs.
Mm-hmm.
You can even do those on single families. So
Yeah.
if someone's trying to build an investment portfolio, say they're, self-employed, we've both seen it.
Yeah.
Hey, you made $500,000 last year, but you don't like Uncle Sam's grabbing, most of it, and you got lots of write-offs, but on your taxes you're making $30,000 a year all of a sudden. Okay, shoot. Now I got $30,000 a year to go qualify.
Mm-hmm.
If you're buying an investment property, as long as you have the down payment and the building performs, you can still purchase it.
Yeah.
So another program where there's pros and cons to it itself. Yeah. And then coming later this year, we do expect Fannie and Freddie to bring back the 1% down conventional loan, if not 0% down. Way above my pay grade with the government on whether we can do that or not.
Yeah.
Fingers crossed that it comes back later this year. So.
Yeah, I remember years ago when I was in Florida, what was popular back in the day, they would do a lot of ARMs, adjustable rate mortgages. Is that something, I haven't really seen much of it here in Alaska, but is that something that's possible with interest rates if they happen to go up versus the opposite?
Yeah, so we actually did quite a few of them this last summer on VA ARMs.
Okay.
We had some families that, hey, they were going to be here for 3 years strictly. They already planned their get-go exit. And say, the 30-year fixed VA was at 6.5, right? Mm-hmm. And then the 5-year ARM was at 5.75.
Right.
Well, they only plan on being here for 3 years, and that ARM rate is going to be fixed for 5 years.
Right.
That makes sense for them.
Yeah.
Because they're saving all that interest, and they are adamant. And I'm, having the discussion. Hey, if you guys do stay past 5 years, there is the potential for this interest rate to go in either direction. And we discuss, hey, it's going to adjust up to this much per adjustment period. Here's the adjustment period to make sure that they are well informed of what they are doing.
Yeah.
So there's those pros and cons. Lately, as interest rates have come down, the gap between the 30-year fixed and the VA or the ARM hasn't really been there to really benefit.
Right.
It just really depends on where the market's going.
Yeah, and that's what I love about being in real estate is I get to eliminate some of those mindset shifts, right? That those fixed mindsets or the ones that don't believe or they're afraid. My mom was that way for a long time. She never thought home ownership was possible. But I explained to them that there's options that we can do as realtors as far as getting closing credits, and they could apply some of that closing credit to that interest rate buy downs. And so those are some things that they have opportunities for too. We've had situations where we did transactions where our buyers will go into a deal and they will walk away with a check at closing time. And they're like, how did that happen? It's a lot of navigating, but it's possible that you can go in there with not only zero down, but you can get cash back in return once you close on your house. So that's always fun.
Yeah, we had a couple of transactions where the buyers were getting a good chunk of their earnest money back.
Yeah, yeah.
And we've even seen it on some Anchorage multifamily deals.
Oh, wow.
A fresh E4, E5, starting to build up a portfolio. They can move off base and shoot, you got 3 bedrooms in your unit. You got 2 of your buddies that need to live off base. And you got 3 people plus all 3 units rented. It's a way that a lot of military members don't understand. Hey, I can actually build generational wealth through real estate because you have access to the VA loan.
Right. I'll admit, I didn't know much about that. Or maybe I wasn't paying attention when I was an airman. But I wish I did. I wish I did. I wish I know more about what was available to me. And so now I try to push people, no matter what, whether they think they can do it or not, call a mortgage lender and let's see what you can qualify for.
Unfortunately, that information and education is not super readily apparent and available for a lot of our service members.
Yeah, yeah. And what you also offer, which I love, is there's people that say their credit isn't where it's supposed to be or where they want it to be. And I offer them, I said, just talk to Lucas. He can offer you credit repair programs or at least develop a plan, like you were saying earlier, of what we can do over the next 5 years, 6 years, 7 years. whether that would be an IRRRL. You want to explain an IRRRL, what that means?
Yeah, so there's the VA IRRRL, or streamline refinance is what people call it, because no one likes to spell out IRRRL, because it's interest rate reduction refinance loan.
Yeah.
It's a way of going, oh shoot, my VA loan's at 7.0 right now, and I want to reduce my payment. Okay, today's market rates say it's 5.75.
Yeah.
There's no appraisal.
No appraisal.
Soft credit only. We don't even look at your income. And you are able to, if you want, finance all your closing costs. So you're not bringing any money to the closing table. As long as your payment's going down and the rate's going down by 0.5 point, plus the, we're not charging 10 grand to drop the payment $100. There is a calculation in there to make sure, people aren't taking advantage of service members.
Right.
Great step. That's also there because, we should not be, that's the population we should also not be, taking advantage of.
Right.
Especially, but it's a very simplified way for a lot of service members to save money. We've been doing quite a few of them, getting a lot of folks down that were, closing during PCS season right at the peak of rates. That, hey, they didn't really have a choice, They got to put their family somewhere, so we understand. So now it's our turn, go back through all of our closed deals, make sure that, hey, we're not essentially overcharging $300, $400 a month, and we can turn around and refinance it for them.
And I could tell, so I'm going to ask this anyway. You seem very passionate about lending and taking care of people. What are some values that you have that make you different from other businesses?
Going into 2026, we were sitting down thinking about how we can make our company better. We've been growing fast every year. Year-over-year growth is outstanding. But how do we keep up with that growth? So there's two ideas that we keep bringing. One, simplicity. We want to make it as simple as possible for people. I was recently reading, hey, people pay extra money for DoorDash. You know why? They don't got to get off their couch. It's the simplicity.
Yeah.
So we want to combine the simplicity of getting a mortgage, the cost savings of getting a mortgage, as well as a specific set of principles on how we operate as a business going into 2026 to improve efficiency, cost, and also the overall transaction experience. You treat every client that walks in the door like it's your mom.
Like it's your mom. I like that. Are there any hidden costs to waiting for rates to drop? What is the end result? Because there's a lot of people that say, I'm just going to wait. I'm going to wait. I'm going to wait. What are the hidden costs of that waiting?
Outside of real estate, I'm a big stock market guy. You can get me talking for hours on end about the stock market as well. We've actually had this. We've met for lunch to talk about real estate, and we end up spending 80% of the time talking about the stock market.
I love that conversation.
So, great Warren Buffett says, you don't make money when you sell, you make money when you buy. My philosophy is, hey, if rates come down, and obviously I don't have a crystal ball.
Right.
I can't predict the future. Exactly. My idea is, rates came down 1%, 1.5%. Prices are only going to go up because more buyers are going to come into the market.
Yeah, supply and demand.
Yeah, simple supply and demand, being basic economics. Yeah. Therefore, the house went up $50,000 that I really wanted. Yes, my interest rate's lower, but now I'm paying $50,000 extra.
Yeah.
One, that's only going to be hurting your potential resale value in the future with gained equity. And two, your payment may not really change that much at all.
Right.
What I'm telling people is, hey, if now's the time for you, now's a good time to buy. Yeah. You get in at today's prices. You can always refinance down the road. We always want to make sure it's in their benefit. They're not having to spend $6,000 in closing costs to drop the payment $30. As much as we'd love to just keep churning, we got to make sure it's in their benefit. Yeah. So you do good business to keep them as customers.
Right. And if you take care of your house, I haven't yet seen anyone who bought a house in the last 5 years lose any money. Home prices, like you say, are going up every year. And so if you were sitting on the idea, if you liked a house, most of these houses are one of one, which means you're going to miss out on your dream house if you say, I'm going to wait because it may not come back. And you may not find one similar in that same neighborhood for several years. And so, yeah, that's a hidden cost.
Yeah, and then as rates do, you say they continue trending down, we have such a large pool of current homeowners that are locked in to their current rate. Right. That aren't moving and aren't selling, even if they're dissatisfied with where they live, or hey, the house is too small for them now, or they want to move out of state because they say they have a 2.5% interest rate. Yeah. As rates come down, that's going to open up that pool more and more, only causing more houses will hit the market, but so will more buyers. And then now you're competing against the people finally willing to sell, plus all the people that have been waiting on the sidelines.
And new construction, right? We've been seeing that a lot in Wasilla, where for the first time, we used to advise people comparing Anchorage to Wasilla. If you want to save money, get bigger land, more property, then come out to Wasilla. That wasn't always the case in this last year with all the new constructions. I think overall price, median price, Wasilla had caught Anchorage for a little while because of all the new construction. So it's a lot of change, a lot of shift. And so you're missing out. I know when I first got into real estate, the average price of homes in Wasilla was about 300,000-400,000, and now they're getting closer to 5-6. You got $1 million homes in Wasilla now, plenty of them.
Our average loan amount's gone up about $75,000 since we opened, and we've only been open,
3 years.
pushing on 3-4 years total.
Yeah. So it's a big change. So don't wait. If you're ready to buy, make that move. Don't be afraid of it. What are some loan strategies that are more common right now that weren't popular a few years ago?
Yeah, so before I got into the lending, we saw that huge boom during COVID with, low interest rates. Apparently, I missed the best time to be a mortgage broker ever. The day we opened as an office was the first day that the Feds raised rates. So not the most advantageous time to open a mortgage brokerage, but we kept with it. We're seeing a lot of seller credit lately. So, there's always the shift between a seller's market and a buyer's market.
Right.
In all honesty, things are slower for a lot of our, realtor partners and stuff. We're keeping up and actually steadily increasing going into the month right now. However, that's also including refinances, people, doing rate and terms, taking cash out. So there's that little separate piece. However, we're seeing a lot of seller credit lately that we can use to either buy down only the interest rate to lower the monthly payment, or hey, let's split it between lowering someone's cash to close plus buying down the rate. And we're seeing those offers get accepted quite often because, a couple years ago when it was still a very, very heavy seller's market, you didn't see those seller credits that often.
They were purchasing homes for $20,000-$30,000 above asking.
Wave inspections.
Yeah, appraisal gaps. So you're right. We're not seeing as much as that anymore.
A house could be on Facebook Marketplace for 6 hours and have 10 offers.
Yes. And we're probably going to lean into where we're going to get into the multiple offer season again. But you're right. There's a lot more flexibility for buyers to negotiate today that they didn't necessarily had 2 years ago. So.
And one we have seen is you have to weigh the pros and the cons of this offer strategy. But, oh, shoot, that house just had a $15,000 price reduction, right? It went from $415 to $400. Okay, how about we go offer them, say they say no to $400 with some seller credit. You look at the math between, hey, here's the 5, 10, 15-year cost of ownership. If we we offer $410, but then we take the $10,000 back as a seller credit.
Yeah.
Because the seller's still netting the same. You're coming to closing with less money plus a lower interest rate. It sounds kind of counterintuitive, but depending on the loan program and the purchase price, it can make a lot of sense.
Absolutely. A lot of strategy involved, and that's why I always say, talk to your lenders. I try not to cross that line. I stay in my lane, but I give you as much advice. But I always point you back to the experts and the people who know the business.
I don't answer contract questions. That's above my pay grade as well. So that's when I flip them back to you and be like, hey, that's between you, Jason, and the sellers.
Yeah, and that's my 3 focal points where it's collaboration, communication, and connection. I build those connections, we collaborate, and the communication is always going to be there. And that's what I love about people that I consider in my circle is availability, right? And so if there's a buyer out there that's wanting to shop around, I need to be able to reach you so we can get that 90% letter and we have it ready to present an offer and we don't miss out on an opportunity. So that's what I love about you is that relationship that we built over the years.
And the amount of times you've called and it might be just a smidge past business hours, but as an office, we don't have business hours
at all. That's especially when you're working with a lot of military. I'm not stuck on a 9 to 5.
I've had to download different apps in order to speak to some of my clients. I got WhatsApp now, Signal. And I had to download Skype. I haven't heard about Skype in 10 years. Just to be able to do a video chat with some people PCSing over from Germany.
Right.
So that was a time zone difference to get on. And we actually had them sign while in Germany.
Right.
Completely virtual closing. We give them a 24-hour period. It's like, hey, jump on, shoot me a text 5 minutes beforehand. I'll jump on too. I might be one eye open, pajamas on, but I will be there.
Yeah.
And then I will go back to bed after you're done signing,
Yes,
and
yes.
you make sure everything,
Right.
you understand everything.
I tell them if I'm awake, I'll answer. If I miss the calls because I fell asleep, as soon as I see it, I'll give you a call back. But it's not just military that I interact with. There's a lot of slope workers. I got off the phone 11:30 last night, finalizing some emails because I try to be available when they are, and that's that personal piece, building that relationship, because it's a big deal to purchase a home, right? It's the biggest purchase most people are going to make in their entire lifetime. And so as much as I can remove that stress from them, from that process, then I'm going to try my very best.
Yeah, and like this weekend is drill weekend.
Yeah.
So I keep planning a whole bunch of fun things to do, and I was like, oh shoot, just kidding.
Yes.
And I made the mistake of planning a client meeting Saturday, just to go, because we got 2 different families buying. They're all kind of intertwined, helping each other out. And I was like, hey, how about we just all meet in person? Let's get this all knocked out. And thankfully, it was a late evening appointment, so it actually works out that I'll already be in Anchorage for drill. Nice. However, I have to show up in uniform. So I'm like, hey, I'll be there. I might be, 5 minutes late. I'm like, I got to drive 20 minutes, about 10 minutes after I get off drill. But I'll be there. I might be a couple minutes late, but it's that dedication. It's like, hey, I'm going straight from drill to their office to make sure that they understand everything. Because no one likes to sign something or get into something that they don't fully understand, especially when there's that dollar amount tied to it.
That's true. And having that flexibility is always good. That's what's beautiful about being an entrepreneur is you have some flexibility, but you can also maintain your boundaries too, right? There's times where we're traveling. You and I were on a cruise ship at the same time, and we were still making phone calls to each other, but we would text ahead of time, say, hey, are you available now? You're not available?
I'm like, sorry, Jason, I'm in the club. Yeah. My bad. Give me 5 minutes.
Yeah, but it's just that understanding. It's important to set your boundaries as well, but make sure that we never forget our client and those buyers who are making the biggest purchase of their life. I'm going to remove that stress. I'm going to try to make sure that I'm available as much as possible.
I know the joke in the office is I've closed my largest transaction ever from the beach in Mexico using a VPN while like 6 or 7 margaritas deep. And wow. I don't, partake in alcohol that often unless I'm on vacation. But that's the joke in the office is the title company was able to tell. However, we got closed early.
Yeah.
And the client was ecstatic.
But it's Mexico. It's probably just rubbing alcohol with water.
Yeah, true. There was a little bit of pineapple in there.
I was like, I'm not a drinker, but I don't feel anything.
Yeah.
But that was a good year. Good year. Can you share a time when a deal almost fell apart, and how did you salvage that?
Something we've seen a lot lately is increased insurance prices. Especially if you're going into a first-time homebuyer transaction and they're right on the cusp of that debt to income, and especially with multifamily insurance prices right now. When I bought my fourplex, I believe my insurance policy was about $1,800 a year. As of renewal next month, it's over $3,000 a year.
Wow!
So it may not seem like, hey, $1,200
yeah.
annually, but that's $100 a month that we have to count into a buyer's debt to income. So we recently had one that at the estimated insurance, and I was even padding it like $30 a month just in case, and I thought that was enough. Their back end DTI was 56.5-ish. Insurance came back too high. Wow. So I started calling all my insurance friends. I asked the client permission. I was like, hey, do you mind if I shop this around for you?
Yes.
And we got them back down to 56.98% DTI. So it's like within pennies a month.
Yeah.
To get them closed last minute. Finally found an insurance provider that I'd never heard of in my life. However, they were a part of some association from college that allowed them to use this specific insurance company to save them $20-$30 a month to make it work.
And over a long period of time, that helps. So insurance providers, I will be reaching out to you because I get that question a lot where it's a wood stove and they can't get insured. I'm like, oh my gosh, this can't be the first wood stove in Alaska.
Yeah,
Alaska.
We're seeing even some insurance companies that we've used and said, hey, sent clients to for years and years because, hey, they get it quick, they're great priced, and they turn around for our clients and we'll call and explain the insurance policy to them from start to finish. That's huge for us because insurance can be very convoluted.
Yeah.
So we want to make sure, hey, you're paying this every month. You know exactly what you're getting. start denying, unfortunately, policies. And it's nothing to do with the local insurance agents. It's all big corporate office
Yeah,
downstates.
that sounds familiar, yeah.
But with a lot of the, the wildfires around the country, the hurricanes, cost of insurance is going up as a general.
Yeah.
So we're seeing a lot of people bundle their cars to save, $40 a month on the home. Hey, $40 a month is $40 a month. That's 2 trips to Taco Bell, maybe one now.
Yeah. Insurance can be tough. So I'm calling you guys. I will be calling.
I'll send you my favorites and start picking.
Yeah, I have my list. We have my list. So they will be here. Looking forward to talking with them as well.
You know who you are.
What does a good realtor lender partnership look like for you?
Yeah, like first thing I want to say is what you kind of brought up is I respect everything the realtors do, but there is the kind of like the staying in your lane piece that we've come into a lot of unfortunate conflicts where it's, oh, my realtor said I can do this for my loan. And then we have to turn around and say, hey, unfortunately, that's not allowed. Right. It's not just an us thing. Hey, that's, a Fannie rule.
Yeah.
And then we have to become the bad guys all of a sudden saying, hey, no, we actually can't do that.
Right.
Unfortunately, and this is why, and we explain to them. And then we reach out to the realtors, hey, that's some outdated information. Do you mind,
not saying that anymore?
Yeah, it's because I don't like to be a part of the contract negotiations. That's, nothing to do with me. I follow the contract. I follow the numbers. If you want me to price something out, change in the contract, let me know. But I'm not going to advise the client, oh, I would take that deal. Not my place, as well as kind of the open communication. Everyone's in it for the same job, right? Mm-hmm. And then what we've been doing a lot lately is, you say you're representing the buyers, and there's someone I've never talked to representing the sellers, right? I like to call the listing agent and be like, hey, my name's Lucas. Going to be the mortgage broker on this transaction. Thank you for accepting our client's offers. Here's my cell phone if you ever have any questions.
Yeah.
And there's questions that we will answer, and then there's questions that we will not answer.
Right.
Depending on what it is. I'm not at liberty to discuss my client's finances. We won't even discuss them with the buyer's representation unless they've been specifically told to.
Right.
So it's just that communication aspect, as well as, like you said, hey, you answer late, I answer late. Unfortunately, our underwriters start calling us at 4 a.m, so sometimes I'll answer really early. Yeah. And then Thursdays, if you want to get a hold of me late, that's the best day because that's leg day. So any excuse to stop my workout on leg day, I'm there for it. So.
Yeah, and that's a good segue because I want to talk about that, right? And so you have a healthy work-life balance. That's why I love. We talk about fitness a lot as well. And so let's talk about fitness. What do you do? Because Lucas also likes to train people. He's a personal trainer as well. So talk about your life outside of finance.
Yeah, so outside of real estate and talking about the stock market, you want to talk to me about hunting and fishing, I'm there. I'll tell you where to go hiking, basically anything, stereotypical Alaska. And then one of my big passions is working out because I believe, hey, look good, feel good, be good.
Yeah.
There is that dopamine release, endorphins rushing through your body, especially if you're working out in the mornings. But there is that work-life balance. As much as I would like to block out everything but my workout, I'm no longer allowed to control the music in the home gym because when my phone rings, it stops the music.
Oh, wow.
And next thing you know, I got an AirPod in, I'm talking while lifting. You might hear me in the background.
And
they're asking, what's going on? I'm like, oh, I'm lifting. But, hey, you have my attention.
Right.
So I can do it, autonomously. Because, hey, we spend a lot of our time at our desks or at home working. You have to get the blood flowing. You have to, listen to your mind, listen to your body. Right. And that is something that I've offered to, some of our realtor partners. Like, hey, I've got one of the coolest home gyms in Alaska, I would say.
Right, yeah.
Come over and work out.
Yeah.
I'm bored and I'm lonely. So swing by, let's get a workout in. Shoot, you want to create a diet plan because you're going on a cruise and you want to, look great on the beach. Call me. We'll set up something.
Yeah.
I don't charge for it. It's more of just a passion project.
Yeah.
Just because I used it as a way to learn more about myself, my fitness, and my diet.
Yeah.
Because that's been the thing I've always struggled with is that I'll work out 7 days a week, but you'd catch me eating Ben and Jerry's 7 days a week. That's my kryptonite right there. Ben and Jerry's milk and cookies.
Yeah.
To be exact.
Mine lately was Oreo cookie ice cream. Oh my gosh, it's so delicious. I need to stop.
Shout out to local business, Big Dipper Ice Cream in Palmer. They set up that mobile drive-through just down the road from me. I drive by it twice a day.
Oh, wow.
All summer it was catching me.
Yeah.
And then I realized, wow, this milkshake probably got about 1,000 calories in it.
I was a frequent flyer this summer to Miller's on your way out to Willow.
Miller's got me all high school.
Oh my gosh, It's so
Mhm.
good. So Miller's
Mhm.
on the way to Willow, was it in Houston or past Meadow
Yeah.
Lakes? Delicious. So
Mhm.
stop by there.
Yeah.
That's my shout out to
Mhm.
them.
And they got like uh what's it called? Big Dipper's got Barely Awake. They got so many cool flavors. They do eggnog and toboggan.
Oh
So you
wow.
got like all the seasonal flavors. So we've been going there a little more often. But hey, it's the winter. You can put on
Yeah.
an extra pound or two. You can
Yeah.
get your free Motto Mortgage hoodie to cover it up.
And if you're froggy, you can go to Duke's and get some
Hmm.
infused ice cream. That's another topic. I don't drink, but my wife does like that in her milkshakes. Um, if your family member, coming back to finance, if your
Hmm.
family member were to buy a house today,
Hmm.
what advice would you give them?
Stereotypical location, location, location. Live where you are happy.
Yeah,
You can always change the paint color of the house. You can
I
always
like that.
redecorate. You can always add on to the house. Or you can always redo the yard.
Hmm.
But the exact location that you live, you cannot pick up and move most homes
Yeah,
to somewhere else.
yeah. Know what they want
Hmm.
going in. Yeah,
I recently purchased my first single family home. I've
yeah,
always lived in my fourplex since I was 19 or 20 and bought it. There's some things, hey, I want to repaint the house. However, where I bought, I have no idea of when I want to move because of where I am.
okay.
And that's the biggest thing.
So what's the next step for Lucas? Lucas is very bright. If you can't tell, he's one of the young top 40, under 40 guys. But what's
Uh,
next? Do you see a life in politics or anything like that?
I I think it would be really cool.
Yeah.
Um, Go serve our state,
Hmm.
serve the people. I was born and raised in Palmer. I got the Palmer Water Tower right there. I
Nice.
swear to God, I've seen like 6 of them now, but I was the OG for that.
Right on.
Serve the people, and then think one day um, expand into like more investment management.
Okay.
Hey, we've been able to help people set up their life going forward with home ownership. Okay, well now shoot, let's create you a budget and let's show you how to retire comfortably, set up your kids and set up the next generation. That's something I can almost talk about just as much, if not more, than home buying and mortgage brokering. That's always been a passion of mine.
Mm-hmm.
Shout out to Mr. Taylor at Matsu Career Tech High School, my personal finance teacher. I would not be anywhere near where I am today without his guidance.
It's amazing. And you recently went back to UAA, right? And taught some classes recently?
All right, that's coming up. Ooh, next week.
Next week?
I'll be the keynote speaker for the UAA Real Estate Club.
Okay.
Great program if you're interested in real estate. Whether you're, a high school student now, they have a workshop coming up. If you wanted to ask about the workshop, reach out to me on Facebook at Lucas Adams. That's just my name. You'll see my smiling face and a bright green motto T-shirt. Great program. That's where I originally got interested in real estate, and it's not just this is how you buy and sell a home. It goes around to a lot of big properties. We went and toured that one property, JL Towers.
Mm-hmm.
Went inside there, got to look at like the finances backside, got to tour the whole maintenance system. It's an amazing in-depth analysis of all different types of real estate. And then if that interests you, shout out to Professor Fields at UAA.
Terry Fields, yeah.
Mm-hmm.
He was
one of
my
the most
instructor.
one of the most knowledgeable men in the field that I've ever met. Great guy, will teach you anything and everything about real estate. That Widener program set me up.
Okay.
So I didn't stay in the property management side. I still use my pro forma template that I made in that class to help buyers look at investment properties.
Yeah.
I'm not going to tell them, hey, this is a great investment or this is a bad investment. I look at it on the financing side saying, hey, this building performs or this building does not perform at this price point, this interest rate, this down payment.
That education piece.
Because we don't want to put one of our buyers into an investment property if it's a bad investment.
Yeah.
We want to be open and honest. Hey, here's the monthly cost. Let's go look at your property taxes. Let's go get an insurance quote, and let's look at how much money you got to put down. But after putting the money down, you're only making $500 a month, but it's costing you $50,000 down. That might not be the world's greatest investment right now with how interest rates are, the building's price. So we like to tailor that to individual clients, and you can also get me talking about that for hours on end.
Oh yeah, you definitely changed my view on it. I was using Ally Bank for my trading, and he tells me to switch to SoFi because I was able to start purchasing fractional shares, which I had no idea I was able to do. I seen that in Coinbase, like with Bitcoin and stuff like that. But with stocks, I never knew I can do that until we sat down and talked. And so now I look at my app every day and I'm making moves every morning at 5 a.m.
Exactly. Hey,
So it's fun.
we sleep, but the market does not.
Does
so
not.
Some days, I'm saying, I'm like, hey, it's moving good today. Some days I just close the app in the morning. I'm like, it's not my day.
Yeah.
But it's that long-term growth mentality that, hey, we're holding on to these investments, whether it's my fourplex, my house, all these different companies and ETFs we've been buying for the next 30, 40 years to build up that generational wealth. I recently started a 529 account for my nephew.
Oh, wow.
So I never got 529 account growing up.
Mm-hmm.
So I was like, hey, you know what? We're going to start it the next generation. And, one day if I have kids and he doesn't use it all, boom. Now my kids got college.
You can put your PFD into that too, yeah?
Correct.
Okay.
And there's some different programs with the state of Alaska. Sometimes they're matching it.
Mm-hmm.
You can put the kids' PFD. I just contribute. It's like $50 a week.
Yeah.
Just goes off. I don't even see it.
Set and forget.
Diversify it for him. I think he's 8.
Yeah.
So he can basically go to any program in the state. But I'm like, hey, this is my money.
Yeah.
You're going to listen to me and go to a program I like.
Yeah.
We'll see how that conversation goes in about 10, 11 years.
But generational wealth starts with action. It starts with individual initial investments. I was able to convince my wife to set up her SoFi app. And so now she's actually trading stocks and she bought a few ETFs recently as well. And so it's just overcoming that mindset shift, right? I wasn't familiar. My wife wasn't familiar. But once you get more education and start talking to other people like yourself, you remove that fear, you remove that barrier. So,
and then one of the fears that I've come across lately outside of the finance world is had some friends recently reach out to me that have been coming to my home gym almost every single day for 6 weeks straight.
Oh, wow.
He's I'll say it, he's overweight, right?
Yeah.
He doesn't want to go into the gym because of that fear.
That fear of judgment.
I'm like, hey, the gym, for the most part, we're not there to judge. If you're in the gym and you're working out, you're making your life better, we're happy you're there.
Yeah.
Unless you're going there when I'm there and you're on the machine I want to use, I'll let you use it. But other than that, I think it's just that fear of starting. Holds people back from anything in their life, whether it's buying a home, open an investment account, or getting, their life in a little bit healthier of a status. Yeah. It's that fear of starting.
Yeah.
But I feel like if you're scared of starting it and it can benefit you, that's a sign that you need to at least try.
Yeah. And are you targeting the right muscles, right? When I was in high school football, it's bench press, power clean, it's the basic stuff. They really don't do anything to get you stronger or more physique, if I say that right. But yeah, so the education piece is important for anything that you do. And so I can appreciate that. Yeah. Well, thank you, Lucas, for your time. It was fun. I'm not sure. Did we run out of time? We're rocking and rolling pretty good. Keep tuning in. Please like, share, and follow so we can continue building up my circle. And thank you for tuning in.